Welcome to this session. It's our proud privilege to have a very high-powered panel today, and I do want to acknowledge all the four people who are part of the panel today. The format we are going to take today is Pradeep Udas, who is the Executive Director of KPMG and heads the IT/ITES practice in KPMG, will chair the session. Pradeep has been to Chandigarh before in his previous avatar when he was part of the Greater Pacific private equity fund in Mumbai, based out of Mumbai. He'll be followed by Rupa Purushottam, who's going to give a presentation on the state of the economy. He'll be followed by Dhanpal Zaveri, who will give a very much on the private equity scenario in India. And we will jump in with any comments on that. As I start the session today, I thought I'll briefly read out the backgrounds of our speakers today. I briefly introduced Pradeep. Pradeep's had long innings with KPMG, was the founding partner of KPMG in India, with part of the group that came back from the US to set it up. Dhanpal Zaveri is the CEO and partner of Everstone Capital Advisors. Previously, Dhanpal was with the Future Group as its executive director. He's also worked as director of corporate strategy with Vedanta Resources, where he was responsible for setting the strategic direction. And other assignments have been with ICICI Securities and Investment Banking. Rupa Purushottam, Rupa is right now the head of research with Everstone. She was with Goldman Sachs. She was part of the group that authored the original BRIC report, which is all of us quote that quite a bit. So thank you for being here. Deep is the managing director for the private equity practice of Everstone. And previously he was with Horselive Capital Management, focused predominantly on the infrastructure sector. And I saw that, sorry. So over to you, Pradeep, to get the session going.
Thanks, Puneet, for the introduction. One thing I would like to add that I'm very closely associated with Thai, so so for me it's you don't need to thank me. It's my duty. I'm part of the Mumbai Thai chapter, so
Now we come
so I kind of look forward to. We've always talked about having cooperation between the chapters and helping with this. So I've done my part. So Puneet, you're going to be your partner.
Yeah, my visit to Mumbai is my thing.
Yes. And so I really this is if you remember some time ago when we talked a few years ago, some of you were there. I remember the basis where we talked about the economic scenario then, which was 2009, I think, and that was quite different, and now it's quite different, right? So where we are today. So we thought we'll start off with Rupa, who has fantastic experience in macro picture globally, and particularly as it relates to India. It can give us an insight. We're talking about in Chandigarh, some of the studies they've done, how Chandigarh figured in that. So, and I'm looking forward to that talk. So if I'll just pass it on to you, and then we will do the other parts.
Hi everyone. It's a great pleasure to be here. It's my first time in Chandigarh, so it's been a good couple of days getting to know everyone here. Just to give a little bit of background before I start with the presentation on macro, I just wanted to give slight background on Everstone, and you'll hear a little bit more from Deep and from Nepal. But we're a firm that manages about $1.6 billion across private equity and real estate. I had research for the business, and so what we do in research is try to focus on what's happening in the economy, obviously, over the next year or two. But we really try to focus on creating research that's thematic. So we think that there's a lot of research that focuses on the macro indicators, GDP, interest rates, inflation, and there's a lot of research that's really looking at what the structural trends are that are affecting both the macro and the micro. And so part of what we try to do in research is really look at how those patterns are evolving on the ground and how we think they'll play out over the next 10 years, 15, 20 years, and so on. So with that as a background, what I thought I would do in this presentation was to just share our views about the shorter term horizon, what we see happening in the economy over the next year or 2 years, and then move into some of the more structural research that we've been doing over the past few years. So when we look at what's happening in the macro environment this year, in my opinion, this year is probably the most challenging year that we've seen since 2005. So since that first cycle, when we've seen a lot of capital really coming into the country, we've actually really benefited over the last couple of years from some positive headwinds. But this year in particular, a lot of supply side pressures are really all coming to a head at once. So while we think we'll still have a strong year in terms of output, we think that policymakers are really going to be facing a very delicate tightrope, particularly because we see three challenges in particular, and they can't all coexist for very long together. So the way that we look at this, obviously everyone talks about this, but the three problem areas that we really focus on is first, obviously, inflation, which is by far the most important. So we see this as really being the key lever that really needs to show some easing in order for policymakers to really be able to take a breath and be able to deal with some of the longer-term supply-side issues. So again, as we've written up in the slide, we think that inflation will ease towards 7% over the course of this year. But of course, as we're seeing global commodity prices starting to hit, there's one after another and after another shock that's really playing into sort of longer-term inflation staying higher than expected. Followed by this, we have a situation where we have very tight liquidity in the system. So we've seen some easing in financial conditions, but the environment is still very constrictive. So we have both of these factors really playing into the overall environment at the same time. And thirdly, we have weak capital expenditures. So I think over the last 2 years, this has been the big indicator that everyone thought would have improved much more quickly than it has. So we really haven't seen recovery from the global credit crisis in the direction that we would have expected. So we're seeing some indications of orders reviving and a lot of talk from the government, but we really haven't seen a lot of it translated to hard economic numbers as we would have expected. So again, I think now we think, kind of looking at all of this, that we expect another, this is slightly dated, so after the last RBI hike, we'll still see another 50 basis points of interest rate hikes over the course of the year. And we think that we're going to see the currency show slight depreciation, and this is more because of global tendencies than what's happening in India. Now, when I talk about overall output, still when we're talking about all of this, when we look at economic growth scenarios, this isn't our work, this is actually from Morgan Stanley, but if you look at the different cases for economic growth over the course of the year, even when we're looking at a bear case scenario for fiscal year 2012, we're really talking about, worst case, going to 7%. So in terms of overall output, the economy still looks very strong. The issue is more that we're coping with a long sequence of overheating. And so as the economy has kind of reached its output gap and it's extending, we're going to see that playing more into pricing pressure. And what our view is as we said, 7.5% growth for fiscal year 2012. So we're slightly below the base case. On the good side, we're seeing that consumer expenditure is still continuing the upswing that started in 2010. So you can see that big dip in consumer activity that happened through 2009. This indicator is something that we construct ourselves that looks at things like retail sales, mobile sales, auto sales, credit card turnover, rental prices, and so on. So this is much more an indicator of what's happening in urban consumption. If you looked at rural consumption, you would actually see, particularly over the last 2 years, it's sort of counter-cyclical. But overall, what we're seeing is an increase. And we think urban consumption will slightly ease. But depending on what happens with monsoons, rural consumption could remain quite buoyant over the course of the next year. When you look at India in comparison to other emerging markets, this is looking at 2010, 2011 looks similar. India really tops the list in terms of pricing pressure. And why we think that you won't see as much easing in inflation as probably most people talk about. I think a lot of people still talk about going back to 6.5%. But a lot of the structural drivers of food inflation, particularly if you look at what's driving it, is really based off of things that are protein-based. So this eggs, meat, and fish component, milk, and so on, is really driving a lot of the core food inflation growth. And we don't think that those things obviously are going to go away. So you're going to see food inflation continue, and obviously being volatile, but still staying strong. And combined with this, as we've seen of late, global commodity prices are going to still work to keep inflation high. And when you look at the impact of the overall economy from just looking at a 10% rise in oil prices, for India and the region, we're kind of in the middle. So we're not as badly hit as, let's say, Korea or Thailand, but again, we're more hit relative to China, let's say, or Philippines. So you see that for every 10% rise in oil prices, you see about a 0.2 basis point hit to GDP. So that's kind of where we're sitting in terms of how we see this year and going into next year. But when you look at the longer term picture for India, particularly when you think about comparisons between India and China, this is really the picture that people start to get very interested in the country about, because as China is sort of easing in terms of this demographic sort of dividend, India is just starting on this rise, and we're really going to see its impact over this decade. So between 2010 and 2020 is when this whole sort of demographic impulse to GDP really starts playing out. So when you look at this chart, this is really looking at the overall demographics contribution to GDP. And as we've seen, between 2000 and 2010, just the contribution from demographics itself was about 4 percentage points to overall GDP. And as you'll see, the biggest hit that we'll see, or the biggest boost that we'll see, will be in this coming decade between 2011 and 2020. And as you can see, the different components that are contributing to the boost are starting to change this decade compared to the last. So urbanization is one of the biggest contributors to overall GDP growth, followed by the age structure and labor force and education. Already, India's economy is roughly the size of all of emerging Asia, ex-China. And again, now given what we've talked about with the demographics, the boost to overall growth, we're going to see that obviously take a much steeper rise over the next 5 years. When we talk about what we look at thematically as a firm, one of our big areas of focus is consumption, is the domestic demand story that's playing out. And these charts kind of try to list out what the really interesting story is for growth in the middle class for India, again, relative to the rest of the BRICS, as well as a lot of the rest of the emerging world. So if you look at the chart on the left, it's really just showing the share of the global middle class that we see over time. And it looks at 2008, I think, relative to 2030. And the point of this chart is that if you look at the share of the global middle class for China, it basically stays the same. But India it's really between this period of 2008, 2010 to 2030, where you see a big rise, where India grows from 5% of the global middle class close to 30% of the global middle class. We're really just about to start seeing that uptake in terms of India's impact on global consumption. The chart on the right just looks at the same data, but cuts it in a different way. It just looks at the number of people entering the middle class. And the point of this is that if you look at China, which is the dark blue line, it's pretty much hit its peak in 2010, and now it's on the decline. So it's still obviously a big contributor, but the full force of its impact has been felt. India, on the other hand, which is the light blue line, again, it's just starting its sort of ascent. Its peak really you only have it realized in close to 2030. A lot of these things being played out. If you look at things like consumer durables absorption, and we're going to talk a little bit about this in reference to particular cities in Chandigarh, but if you look at India as a whole, one of the things that we always try to focus on is where do you see rapid absorption in things like basic white goods? This was a classic analysis of Japan through its development. When did we start seeing absorption of things like refrigerators, washing machines, televisions, and so on? And the data is hard to see, so don't worry about that. But the point of it is really that India's consumer penetration rates are still lower than what Japan's was in the 1960s and China's in the 1990s. So we're still talking about India being about, I'd say, 10 to 15 years, depending on which sector you're looking at in terms of absorption, 10 to 15 years behind China. So we're just starting on that upswing. For us, we see four big demographic shifts that are going to define India over the next few decades. And we're going to take a look at each of these in turn. The first one is obviously just, as we mentioned before, is just its age profile and how young India is. And we're, again, just entering the sweet spot over the next 3 decades where we have a very healthy share of working age population relative to overall population. And this is important if you're looking at anything when you think of education to pensions, as well as the labor force. And there are very important implications to how sectors respond to this age profile as it's moving out. So we'll talk about that a little bit more in depth. As I said before, urbanization, particularly over this next decade, is going to be an increasingly important trend to watch. A lot of people have talked about it in the media, but in reality, we haven't really seen it play out as yet, and it's really going to start happening over this decade that we're in right now. And on our estimates, we're going to see close to 400 million people added to India's urban spaces over the next 3 decades. That's basically the entire population of the U.S. So we're seeing that population just literally moving into India's urban spaces. And we focus on this a lot because we think it's an important question in terms of corporate strategy, but it's also a huge policy question because this is going to be one of the most rapid, and obviously in terms of volumes, biggest transitions in terms of urbanization that's going to affect global patterns, and we really need to understand it better to be able to approach it from a policy perspective. The third big trend is a big change in women's employment patterns. So typically when you see demographics start to play out in the way that they are in India right now, you start to see a pretty significant decrease in women's employment participation. And it coincides with where our fertility rates are they're just starting to decrease and get to that inflection point where you start to see women enter the workforce. As that happens in country over country over country, when you look at trends, that starts to imply very important changes in household spending behavior. So I'll spend a little bit of time right after this slide on that. And lastly, can I still talk? And the last thing that we think is going to be very important is migration. So, whenever anyone talks about India, we always talk about how heterogeneous it is, how mixed it is. You can only talk about one town, one city, one geography, and you can't really extend it to talking about the entire country. And fertility rates are no different. When you look at the diversity of fertility rates in this country, the only thing that matches the diversity that we see here is the diversity in fertility rates that you see across the entire African continent. So when you go to the south of India, as many of us know, we've actually already crossed the demographic transition. So if you look at Kerala, our fertility rates are lower than what you would see in France. And then when you go to the north and the northeast, you have fertility rates above 4. And so when you have such divergence in fertility rates in one geography, what we think that implies is that you're going to see a lot of north to south and center to periphery migration. Obviously, that's a lot easier said than done, But in terms of looking at what we've seen in migration patterns in other places, it'll be a painful process, but one that will, that direction is pretty clear nonetheless. Should I just talk? I'll try to explain the charts. Probably couldn't see much of it anyway. When I was talking about women's employment participation, I just want to spend a minute on this, and I'm going to spend more time on our work on urbanization. But one of the things that I think is really important, and we're just starting to see change, is India's participation rate for women. So when you look at India compared to a host of other economies, and here you can see it on this chart, it's just pulled up, India is all the way on the right. So when you look at its women's employment participation, even compared to China, which is all the way on the left, so Vietnam and China are the highest. India's female participation rate is much lower. So there's a big scope for catch-up. When you look at Vietnam and China, about 70% of working age